The pace of recovery in output and employment has slowed in recent months. So said the Federal Reserve on Tuesday. And to show that they really mean it, they're going to be reinvesting the proceeds from maturing agency bonds and mortgage-backed securities in treasuries to maintain the size of their balance sheet. This downgrade of the economy marks an important shift in Federal Reserve outlook, which has been improving over the last year and a half. On June 24, 2009, they said the pace of economic contraction is slowing. On August 12th, they said economic activity is leveling out. On September 23rd, economic activity has picked up following its severe downturn. Picked up, leveling out, these are phrases that describe improvement. The Fed used the phrase continue to pick up to characterize the economy in November and December of 2009. In January, March, and April of this year, they wrote economic activity has continued to strengthen. In fact, Bernanke was so confident that the economy was picking up speed that he gave a speech on exit strategies to Congress in February. In June, they said the economic recovery was, quote, proceeding. Now, however, the recovery has slowed. Leveling out, picked up, strengthened, proceeding, slowed. The Fed chooses their adjectives very carefully. Businessmen and investors everywhere follow their prognostications because they're the most powerful financial institution in the world. Hence, in the last couple of days, we've gotten a shift in sentiment and a reversal of the risk trade. Following on the Fed on Wednesday afternoon, Cisco CEO John Chambers said a number of things in his conference call that suggested that himself and his customers are seeing a kind of uncertainty and slowdown in the macroeconomy. We are seeing a large number of mixed signals in both the market and from our customers' expectations, and we think the words unusual and uncertainty are an accurate description of what is occurring. People took notice because Chambers has been ahead of the curve during the current cycle. In November 2007, he said that sales going forward for U.S. customers were likely to be lumpy. He was one of the first to comment on the coming recession. And in August of 2009, he said that he saw a tipping point. He was early in seeing a strong recovery that we saw in 2009. So people took notice. They sent Cisco's shares down 10% today, and it dragged down the entire market. Put these two things together, and it's generated a lot of concern.